Redfin, Rocket, Keller Williams, and Stone Point, mergers and acquisitions, oh my. Will the real estate and mortgage industry ever return to profitability? Let's find out. Redfin's story is ending not in a blaze of glory, but with the quiet acquisition. We all know Rocket is buying the real estate tech company for $1.75 billion. Wow. Which, check this out, is nearly the same valuation Redfin had way back on its very first day of a public company back in 2017. For a company that promised and in many ways did transform the real estate industry, it's a humbling finale. Redfin launched back in 2002 as a true disruptor. Employed agents, discounted commissions, a tech-driven platform to simplify the entire home buying process. For a time, it worked. It caught attention, got press, went public, and even challenged giants like Zillow. But beneath the surface, Redfin was never able to solve one problem that really matters: profitability. In 7 years as a public company, Redfin was cash flow positive only twice. Overall, it burned through $368 million in operating cash. The core business model, while innovative, just didn't generate enough margin to sustain itself. As Redfin expanded into new businesses like rentals, mortgages, and title services, it only became more stretched. The company made expensive acquisitions like RentPath for $608 million, Bay Equity for $138 million, but those bets didn't bring the returns that they had hoped for. Eventually, Redfin outsourced its rental business to Zillow. Its mortgage division shrank drastically from over 450 loan officers in 2023 to just 275 by early 2025. And now it's giving up its independence altogether. Redfin, the disruptor, is now part of Rocket, the establishment, if you will. But here's the thing, Redfin isn't the only one struggling. The entire mortgage industry is facing a reckoning as well. In the fourth quarter of 2024, independent mortgage banks and mortgage subsidiaries of charter banks lost an average of $40 on every loan they originated. And if you're keeping track at home, when Q1 of 2025 wraps, that'll be only 2 profitable quarters over the last 12 quarters. Essentially not profitable since the end of 2021. Guys, it's 2025. Let that sink in. According to the Mortgage Bankers Association, revenues were relatively flat, but production costs rose. The industry is facing a painful squeeze. High costs are killing smaller lenders who can't generate enough volume to achieve scale. Larger players fared better, but they're not immune. And while the servicing side of the business brought in some relief, it just wasn't enough to offset broader losses. It's not just Redfin. It's not just the startups. This is a structural challenge across the entire real estate and mortgage ecosystem. Margins are thin, costs are rising, volume is down, innovation is expensive, and competition is relentless. Redfin's downfall isn't just about one company that failed to execute. It's a reflection of the deeper pressure across the entire housing industry. For years, companies have been chasing scale, chasing disruption, chasing growth, but what they haven't consistently chased or found is profit. It's kind of a problem, guys. So now we're left with a bigger question. Can real estate and mortgage ever return to reliable profitability? I personally think they can and will. And one of many reasons I believe this is Stone Point's recent bet on Keller Williams. On the same week Redfin was absorbed, Keller Williams, one of the biggest names in real estate, got a lifeline. Stone Point Capital, a heavyweight private equity firm with deep experience in the real estate space, took a stake in Keller Williams. The move is widely seen as a precursor to an IPO. But why now? Why invest in a brokerage when affordability is low, mortgage rates are high, and home sales are at historic lows? Well, because private equity knows something that others don't, or at least they think they do. Buy low, fix the model, and ride the wave back up. It's a bet that the housing market has a future worth believing in. Can I get an amen? Stone Point has done this before as well with CoreLogic and Lone Wolf. Now they're betting on Keller Williams. So I ask again, can real estate and mortgage ever return to reliable profitability? Or are we watching the slow unraveling of a business model that simply doesn't work the way it used to? The Redfin chapter may be closed, but the industry story is far from over. The next few years will tell us if the housing sector can adapt or if more giants will quietly fade away. Every realtor and every lender needs to see and hear this, so please help us by sharing it via text and email and reposting on social, and we'll see you guys next week.